Hi, this is McDonald's. I can help you.
Hey, I was just wondering if you guys were hiring at all. If you're invested into the stock market right now, you might know why I just made that call. Right now, the stock market is currently in a full-blown panic due to the Call of Duty Warzone situation going on in Ukraine. Not only did the general market close in extreme fear yesterday, but so did momentum, stock prices, and options. We are currently in the middle of what I would like to call a pretty big problem. Yes, the stock market is currently crashing, and your portfolio might be looking a little bit more red than usual. I know that the idea of putting on a McDonald's cap and getting to work for $7.25 an hour doesn't sound too bad at the moment, but what if I told you that you can still make money during this mini recession that we're having? Well, I am gonna tell you. When people talk about options trading or stocks in general, they always talk about the idea of the house always wins. But what if you could just become the house? In most situations, you have people buying contracts like calls and puts so that they can make $1 million overnight. But as you saw from my last video, 95% of those people end up losing money over time. In this market, it's so difficult to win because you can never predict the market correctly. And over 95% of the time, if you try to make that $1 billion overnight, you're gonna end up failing, and the IRS is probably gonna come to your door when you have no money left. So what if we, instead of buying calls and puts on random companies, hoping that we can win $1 billion overnight like it's a lottery ticket, what if we just sell the lottery ticket to those options traders? Well, that's entirely possible, and they're called covered calls. And in this video, I'm gonna tell you exactly how covered calls work, exactly what they are, how to use them during a bear market and a bull market, and how to make money with them all in one video.
It's like the billionaire Warren Buffett says.
So no more wasting time, let's get into an epic covered calls tutorial. So if you go into your brokerage account, that could be Robinhood, TD Ameritrade, Webull, whatever it is, you'll most likely see the option to buy a contract or sell an options contract. And typically what most people do is buy a contract so that they can get the right to own 100 shares of a stock for a certain amount of time. But with covered calls, you're actually going to be the person selling these contracts to the buyers and collecting the premium that they pay to buy their contract. So for example, if I wanted to buy a contract for XYZ for $125, the seller is going to be receiving that $125. So essentially, you can continue doing that strategy over and over and over again and collect consistent profit monthly. They're a pretty nifty options strategy that allows you to collect consistent profits even when the market is heading downward. All right, I know you want to know how to make real guap with covered calls, so let me tell you exactly how they work. Let's go a little bit more in depth. As I said earlier, with covered calls, you are selling 100 shares to a specific person for a certain amount of time, which means that you have to already have 100 shares to use as collateral. So if the company that I mentioned earlier, XYZ, costs $15 a share, you have to have 100 shares of that. So you've got to have $1,500 to use as collateral. The downside to this covered call strategy is if you pick a strike price that's too close to being in the money and the share price actually hits it by the expiration date, you have to sell the 100 shares that you were using as collateral. So for example, if I sell a call contract on XYZ, that company from earlier, for $150, and the stock price right now is $125, if that stock price ends up reaching $150, then you have to sell your 100 shares at that specific price. So the only downside to that is that the price could potentially keep going up above 150 and you're kind of missing out on those profits. However, right now, because of this bear market, if you're seeing those profits, God, please tell me what stock that is because I need to invest into it. So the strategy when doing covered calls is to pick a strike price that's so far out of the money that the share price will never reach it. That way you can just continue selling covered calls over and over and over again and keep collecting consistent profits. All right, you know exactly what covered calls are, and you know the potential that they have to make you consistent profit all the time. So how do you buy them? I'm gonna show you exactly step by step how to buy a covered call after I show you this really cute picture of my dog. Look at that little guy, isn't he so cute? All right, so we're on Robinhood right now, and what we're gonna do is pick a stock that we have 100 shares of. Right now, I only have about 50 shares of AMD, but we're gonna use AMD as the example because I always use this company in my videos. So what we're gonna do is hit trade and hit trade options. Now I've been asked this question before. If you don't have the actual option to hit trade options, the reason why is because you need to have a higher leveled account on Robinhood. So to get the trade options option, no pun intended, we're gonna hit the bottom right corner. There's gonna be a little person icon. We're gonna hit that and we're gonna click the little 3 bars in the top right corner and we're gonna head over to the investing part. It should be the first option on the menu. Now, we're gonna scroll all the way down to where we see options trading level 3. For you guys that don't have the option to trade options, it's not gonna be level 3. So you're gonna have to go to your options settings and then hit upgrade from there. So once you actually upgrade to the level where you can use options, then you'll have the option to do so. Anyways, let's go back to AMD, my company of choosing. Please sponsor me, AMD. It's gonna bring us to the options chain, and from there, we're gonna wanna go ahead and find an expiration date that works with selling contracts. So what you're trying to do is pick an expiration that's far enough out, but not too far out, that your share price has enough time to catch up to the strike price that you're selling at. So I actually like to do weeklies, which is just selling at 1 week. And what you're gonna do is you're gonna hit the sell button. Right now, AMD is trading at $120.97. So we're gonna try to pick a strike price that's far enough out that we don't think that AMD will hit that price anytime soon. So I think I'm gonna pick 130. That's a $10 increase, and in this bear market that we have right now, I really don't see AMD hitting that in 1 week. But if it does, that just means that I sell all of my shares at 130 and then I'll just buy more shares. And by selecting that $130 call, that's gonna make me $57 by the end of the week. So you'll be making $57 on this contract, and that's $57 per week if you do this every single week. So that's around $230 a month that you can make from this contract. Keep in mind that we have an 88% chance of actually coming out with profit on this contract. Versus, if we were to buy this same exact contract, we would have way less of a chance of making any money. Now, should you pick a price that is $10 out? That is completely up to you, but I tend to pick one that's really far out so that I don't worry myself. But let me show you where the real big baller money is when doing covered calls. If we head over to April 1st, which is around a month from now, and we head over to the $127 call, you'll see that we'd be making around $510 in a month with a 70% chance of winning in that contract. That's insane. That's $500 a month that you can make consistently every single month. I mean, there's no way you can beat that, right? So what you're gonna do is you're gonna go ahead and type in the amount of contracts that you want to sell, you're gonna review, and it's gonna tell me that I don't have enough shares for this because I don't have 100 shares of AMD. But if I did, it would tell me that it's using my 100 shares as collateral and that it will hold that money until the expiration date, which is gonna be a week from now. If the share price does not hit the strike price by that expiration date, I will get all of my money back plus the premium that the buyer paid me. What's great about this strategy is that you can use it in a bear market and you can use it in a bull market. So right now, the market is heading completely downwards, and how you would shift your momentum when using covered calls for a bear market is you can actually give yourself a little bit more room to work with. So you can have a higher strike price because you have less of a chance of the actual price of your stock getting to the strike price during a bear market. So for example, if I use a company called Knowledge and it's trading for $15, and we are currently in a bear market, which means that this company is probably tanking just like the rest of the market. So we can pick something along the lines of $20 for our covered call, and honestly, if we're doing weeklies, it's probably not gonna touch $20. Whereas if we were trading in a bull market, we would have to adjust our covered calls to be a little bit higher so that we have less of a chance of actually getting assigned, so that we have to sell our 100 shares. So if our knowledge company is trading at $15 during a bull market, we would wanna pick something along the lines of $25, $30 so that we don't have that much of a chance of actually getting assigned. So that share price will not touch $30 even in a bull market unless we're all gonna be rich. Because if we're in a bull market and the knowledge company's going up, then so is everything else. So you know how to trade covered calls now. Go ahead, make some money, buy yourself a Lambo, come back to the channel and comment what kind of Lambo you got so that I can be jealous for a little bit. If you need any other help about options that doesn't include covered calls, let me know in the comments or check out this video that is literally my ultimate guide to trading options. Pretty good video if I do say so myself. But anyways guys, thank you so much for watching this video. If you enjoyed it, please leave a like and subscribe on the video because I need all the support I can possibly get on this channel. I'll see you guys in the next one. Later!